What if I told you you could profit from CS2 major matches without predicting the winner?
I tested a hedged betting strategy that combines betting odds with sticker investments, and it looked like a guaranteed win. Then it failed completely. But after digging deeper into years of CS2 sticker price data, I found something much more interesting.
The first thing you need to know is that bookmakers always build a fee into their odds. If you bet on both teams to win, you will lose money.
Take this match between FlyQuest and Spirit with its bookmaker odds, for example. Dividing the odds into one gives us the bookmaker's implied win probability. For this match, the total implied probability is greater than 100%. This bookmaker requires bets totaling $107 for every $100 it pays out. The cheeky bastards.
This bookmaker gets paid regardless of who wins. But what if we could take both sides of the bet without paying the bookmaker's fee? That's where stickers come in. I went through historical sticker price data from previous majors, and something very clear shows up.
When teams win, their sticker prices increase. And the deeper they go into the tournament, the bigger the move. Let me illustrate with the Krakow 2017 major and its sticker prices throughout the tournament. We'll start with the eventual winner's gambit. Each day in the tournament is colored green for a win, red for a loss, or black when no game was played. Every time Gambit won, their stickers jumped. And the later the stage, the stronger the reaction. The rest of the top 5 teams, same pattern. And to prove it's not a fluke, here are the bottom 5 teams. When they lost, prices generally dropped.
This isn't random. Sticker prices react to match outcomes, and that opens the door for profit potential.
So here was the idea. Bet on the favorite with a bookmaker and buy the underdog's stickers. If the favorite wins, the bookmaker pays us. If the underdog wins, sticker prices spike and we can sell for a profit.
One side wins, the other side hedges, but either way, we make a small profit. So I tested it on the Austin 2025 major.
And it failed. Completely. When betting $100 on every favorite with the bookmaker and buying $100 of the underdog's stickers, we lost money on all sticker rarities. Something was missing. When we dig deeper and break down results by tournament stage, something weird appears. Across all rarities, first stage matches, profitable. Middle stage matches, unprofitable, but the playoffs, slightly profitable.
That doesn't make sense at first. And you might think upset games in the first stage, best of one matches would be driving this result.
But if we look at the underdog winning rate across tournament stages, there's no relationship.
The driver of first stage profits has nothing to do with team performance. It's timing.
Austin stickers launched before the major started, and that changes everything. When stickers release early, engagement is low. Players wait until the tournament starts before they buy their favorite team's stickers.
In other words, they support their team regardless of their chances of winning. And this is clear in the data.
If we plot average sticker price movements in each tournament stage, prices rise regardless of performance, as CS2 players start to engage with the major. This chart also explains why the middle stages aren't profitable. Sticker prices just don't move enough in the second stage to offset the bookmaker loss. And in the third stage, stickers decrease in price regardless of outcome.
But by the playoffs, something else happens.
The stakes are higher. Winning teams become iconic. People want the winners to live on their skins forever. So the playoff wins create large upward moves, especially for underdogs. And favorites see prices drop as players lose interest in teams that are eliminated.
These are the key dynamics underpinning this strategy. But these dynamics are independent of the bookmaker. So we should be able to remove the hedge bet and only invest in stickers.
And when I simulated buying just stickers, it improved the profitability of playoff games. But we can refine this even more. We know that in the first stage, prices tend to rise overall. In the third stage, prices tend to decline. And by the playoffs, a large variance emerges as upsets create strong price movements in both directions. So here's the refined strategy. Only buy stickers of teams whose odds are greater than 2. In other words, we only buy the underdog stickers in playoff matches. The upside is asymmetric. And when I tested this across Austin, returns improved significantly. Building on our refinement to ignore the bookmaker bet, we can plot profits when investing only in underdog stickers. Profits are significantly higher when adding these conditions. There are 7 playoff games, and buying $100 in stickers for each underdog would have netted us $381 if we bought paper stickers. That's a 50% return, even accounting for Steam's sales fees. This is incredible. So to summarize, here's the simplified version. Prices crash on the first day of trading for new stickers as players look to sell the stickers they've unboxed during the market cooldown. If stickers release before the major, early buying creates tailwinds that lift the prices in early stage matches. Playoffs are where the performance matters most, and the largest swings are observed in prices as underdogs win. Avoid third stage games at all costs. Prices tend to decrease in this stage regardless of match outcome. For the strategy we've discussed, paper stickers are the most profitable rarity to invest in. And finally, as previously highlighted, investing in underdog stickers will give you the best profit.
A printable version of this summary of the trading strategy will be available to download completely free of charge from a link in the description. And that's the strategy. Not bookmaker arbitrage, but sticker price responsiveness to match outcomes during the major. There are some risks to be aware of though. I haven't backtested this relationship between sticker prices and match outcomes for every major due to odds data limitations. Market conditions also really matter. If we enter a bear market in the CS2 economy while a major just happens to be on, the existing relationship between prices and match outcomes might not hold. Thirdly, liquidity is also really important to consider. Avoid embroidered stickers or foil stickers, if Valve ever brings these back, for this exact reason. If you're interested in more deep dives into the CS2 economy, no scope that subscribe button because there are plenty more inefficiencies hiding in plain sight.